Welcome. This is FAR Part 4A, Part 4. And we are on page 4A7 of the of the materials, and just now beginning to look at a chart that might look a little intimidating to you, but we're going to just break it down and get at it. So what you see here is it has the overlay of all government funds, and then the three different categories: your governmental, your proprietary, and your fiduciary funds. And as you notice across the way, that not all 11 fund types are listed here. Yes, you have your five governmental funds and then your two proprietary. But notice what they did with the fiduciary here. They collapsed all of the trust funds into one category and then the agency funds into another. All right, so that's going to be our overview, but we're just going to go ahead and dive in to the next blueprint task, which is to determine the appropriate fund that a state or local government should use to record activities. So there are 11 possibilities, and it's important that you master and understand each of these fund types to be able to know when it applies, because it's going to make a difference in terms of the kind of accounting that it uses, whether it uses modified accrual or full accrual. So let's dig in. All right. First of all, the first governmental fund, and arguably the most important governmental fund, is the general fund. So the general fund is the major fund of government. It accounts for all resources unless they're accounted for in another fund. So most of your taxes, licenses, and fees would go into this particular fund, and it would be for functions such as highways, education, health, and welfare of an organization. So every government will have usually a general fund, and they will have one and only one governmental general fund. Next, we have special revenue funds. Special revenue funds are those funds that have resources that are very specific to be used for a specific purpose. All right, so when you're looking into the background or legislative guidance for the setup of a fund, if you have a particular revenue source that was designed or specified for a specific purpose, then there's a good chance that you're going to want to categorize that fund as a special revenue fund. Things like grants are often included in this, but you could see that a library could be your certain gasoline excise taxes. So a lot of states would be collecting these taxes, and then they would have those taxes devoted into something called the road fund. That's a big fund in my state. But there are so many different kinds of specific revenue sources. Notice here, though, that debt service and capital projects are not to be intertwined in there. They have their own fund type of their own. Now, before I go in to say that, it is possible that sometimes a government would not bother to set up a capital project fund or a debt service fund, but would run everything through a general fund, thinking that that is more streamlined and specific. But occasionally, depending on, it could be that the agency that's helping them sell the bonds says, well, we really want you to set up a debt service fund that's earmarked specifically for the repayment. So sometimes you would go ahead and do this and set these funds up that way. So while it might be simpler, you might think, to keep it all in the general fund, having these other funds that are clearly devoted to a particular purpose makes it a little more streamlined. Sometimes students have troubles understanding the difference between the capital project fund and what goes on in there versus the debt service fund, because oftentimes the actions come hand in hand together. All right. So as we talk about this, a capital project fund is when you have resources coming in that are being used to acquire or build your major fixed assets. Things like police stations, city hall, parks, that kind of thing. And oftentimes you might have a separate fund for each project, and then when that project's done, you would close it. And when that occurs, the fixed assets for which this was devoted to would end up being transferred over to a general ledger kind of account or schedule so that they could be picked up in the government-wide statements. Because remember, there is no capital assets recorded in any of these first 5 governmental funds. Now, having said that, I said there are no capital assets recorded. I did not say there couldn't be expenditures for capital assets that would take place. All right, so the expenditures can show up here, but not the asset itself. All right, so if the capital project fund was taking place because we had sold some general obligation bonds by the government, then students might be confused and they might think, oh, those general obligation bonds, I bet that cash from them comes into the debt service fund. No, the debt service fund is to service that debt. If they had sold some general obligation bonds, the proceeds from those bonds are going to come into the capital project fund that was going to be earmarked and then have the spending for that capital project come out of it. Sometimes the GO bonds would come directly into the general fund. So what is this debt service fund? Then the debt service fund exists because it is where funds are going to be placed in order to service our debt, to pay off the principal payments and the interest as they come due. And governments have a host of different kinds of bonds that they can do this. They can have GO bonds for the most part. Sometimes there's some special assessment bonds. A special assessment would be like if bonds were sold for a particular development, for example, in a subdivision maybe that might want certain kind of sidewalks or something like that. They might have a special assessment bond issuance there. But we have our term bonds in which the repayment is at some of principal is at a future date. We have the serial bonds where payments come in over time. And notice over here that we also can have, they don't have to be bonds. It could be long-term notes, and capital leases may show up there. So again, possible to have multiple funds. Finally, we have the permanent fund, and you won't find a permanent fund in every government. A permanent fund is when a donor has given some resources that the principal is supposed to be reserved into and never touched, but the earnings and that sort of thing can come in and be consumed. But the thing here is that on a permanent fund, it usually needs to be for the good of most citizens of that particular government, because if it was something that was kind of specific and unique, possibly, then maybe that kind of fund would not service all of the folks in the government, but might be instead a private purpose trust fund. All right, so I think GASB wrestled with those funds when they were coming up with that. But the thing to remember, you'll know it's a permanent fund if the principal is kept intact and it's for the good of all of the citizens here. All right, and you can see that they talk about some of the donated assets that could be in a fund like this and that could come in.